I wish there would be a bubble in the clean tech, green tech space, and we'd throw 100 billion at this space. Most of the companies would crash and burn, but we'd have 5, 10 solid companies like the Teslas and other companies come out of this, trying to figure out a way by using technology to make products more sustainable at a lower cost. If you're thinking commercial and you're trying to get a group together that is not commercial, those two models don't work. At the end of the day, it's going to be money that drives influence and global recognition, and that's happening as well.
Hi, in today's podcast, we have a very interesting guest. It's R Rangaswami, the founder of the Sandhill Group. Sandhill Group is one of the earliest angel investment firms in the Silicon Valley. And MR has eventually founded the Corporate Eco Forum, which is an invite-only membership for the global Fortune 500 companies. And more recently, MR founded Indiaspora to bring in executives from the United States and India and transform their success into meaningful impact. In this conversation, we talk about how does MR build such large communities and volunteer-driven organizations at scale in economically sustainable ways. How do you tap into the motivations of people and get them to work for a specific cause or purpose? We also talk about MR's approach to angel investing. How does MR evaluate startups and the benefits of having network and leveraging networks to build your business? Besides, we also talk about how does MR think the world of tech and startups is going to evolve from here? What are the emerging trends in technology, and how can startups either ride into or break these trends or make new trends to create disruptive businesses? I hope you enjoy this conversation on the KVKurious Podcast. Watch on. Hi, MR. Thank you for doing this. Really curious to know more about how is it that you've been able to successfully build mass-scale movements, get people who are at highly impactful positions, leading positions, people with busy schedules. How do you manage to get them together and work towards a specific cause, which might not have necessarily very lucrative incentives?
Yeah, that's going to take a couple of hours to talk through that. But thank you for having me, Krishna, on your podcast and show. I think I got into this accidentally, so I didn't have a set strategy, ideas of how to do it. The way that this started was when I had quit my last corporate job. I'd become an angel investor. And at that time, there was no category called angel investing, and I happened to be one of the early pioneers in that space. And that was kind of where I got into. But my real passion was to connect with people. And keep in mind, this was, I think, circa 1996.
Okay.
1996. So think of it, in 96, you want to start a community or a network or a movement. Really, the internet was in its infancy. A lot of people didn't even have websites, didn't have an email account, or if they had an email account, it was an AOL account. I mean, these are in the dark ages of the internet, right? And so when I was thinking of this, and the reason that brought me to this was when I left my last job, I had 4,000 business cards, all neatly organized into binders. And the question I had was, I know so many people, how do I keep in touch with them? Right? That was the premise. In order to do that, in those days, you had to have physical addresses. You had to reach out to people. There was no LinkedIn, Facebook, any of these social media products, right?
Right.
So how do you get in touch? So these were some of the challenges and in order to address how to bring people together. So initially, since I'd come from a marketing background, I was a chief marketing officer at a couple of different companies. Obviously, I had experience in bringing people together, but it was for a purpose of a commercial enterprise, right? And not and so I had to view it differently because, that was one thing to bring people to a user group meeting or a convention or a conference, but it's all about your product or service. Now, if you're doing something else, I didn't have a company, I didn't have anything of that sort. How would you bring people together? Why do you bring people together? What is the purpose? All these are things that I had to deal with when I started this, thinking of starting my first network, my first community, right? And so you went through the usual machinations as an entrepreneur, like you have, who's your market, what is the size, what do you have to do, and go through all that, meet with early customers or advisors. These are all the things that one has to do, right?
Right.
And I was going through that journey, and it takes time. And then when I decided to start it, I had a set of advisors and initial people who were interested in coming together. But it was coming together for a conference. As opposed to, you have to meet, right? So in order to meet, it becomes more like a conference. So when I was thinking of that, and when I sent my first early invitations, people who were my advisors and friends said, there are too many of these, MR. There are too many events like this. Why would I even show up? So I was surprised, right? Because I thought I'd talked to enough people, I'd socialized the idea, everybody nodded their heads. But when I sent the invitations out, very few people really responded to it. So I was surprised and shocked. And so I started thinking, why is this happening? And why am I not differentiating this event or this community from anything else? It looks like it's coming out to be similar to many, many, many other communities or events or organizations. So that's when I just threw this idea out that said, why don't I make this a charitable event where all the profits go to nonprofits? It just was a whim and just something I threw out. And immediately people responded positively. So I said, okay, let's do it. Let's see how it goes. So therein lies the message that, if you're thinking commercial and you're trying to get a group together that is not commercial, those two models don't work, right?
Right.
So yeah, that's how I became, even a philanthropist in that sense. Is I tried this new model.
But when you were originally conceiving this idea of building this community, did you have an idea that you wanted to do it on a financial stance, or did you approach it from the standpoint of just giving back? What was your original approach to the?
I just wanted to have an event.
Okay.
I wanted it to be sustainable, and hence the profit model, right?
Got it.
Because in order to sustain something, there has to be a profit.
Right.
That's how I viewed it, having come from the software industry, right?
Sure.
But that's why I made it that way. Now, I didn't really need the money in that sense. I mean, of course, everyone likes money and I could use a few more dollars, but that wasn't the intent. So when I changed it to, we're going to support nonprofits, and I'm not going to make a penny out of this, people said, hey, you have no agenda.
Right.
So that became one of the core principles: is you can't come into a movement with your own agenda.
Yeah. So, but let's say when you're building a not-for-profit initiative, and maybe at the prime stage of your career, that there's a lot of time that you're investing into this prospect that is not necessarily going to reward you, something tangible. So what is the drive for you to still do that on a daily basis and at scale?
Yeah, I mean, I set a goal for myself early on that I would be independent at age 40, and I failed. I became independent at age 41. So
Okay.
I missed it by a little bit.
Okay.
But so at that time, money wasn't the motivation. I became an angel investor. I was really curious and excited about meeting startup entrepreneurs with two, PowerPoint deck and two founders, and working through their business model, their idea, positioning, all that kind of stuff. So I was very curious about that, and really not looking at a monetary objective, right? And so that's how I got started. So for me to make this a philanthropic model really was based on that I was not looking to make money. I left corporate life so that I didn't have to get on the treadmill again and go make more and more money and all that stuff. I actually left a ton of stock options on the table when I left my last job. So I could have stayed potentially and made much, much, much more money. But my motivation was to have a family, to raise a family, to be with my kids. And so that was the motivation, and it wasn't money.
Got it. And when you say you missed your deadline for becoming independent by a year, what exactly was the set of things that you were falling short of for that 1 year?
Not much. I mean, it's just a goal I set for myself when I went to meet.
So is it more of a number in terms of how much money you would want to have in the bank before you call it off?
Well, that's a story unto itself. I went to see a financial planner when I think I was 35 or something.
Okay.
And so the guy goes, usually financial planning, typically the software that they use would typically plan for someone to retire or do something at 60 or 62 or whatever, right? And so the guy said, so when do you want to retire? And I wasn't really thinking of retirement. I just said 40.
Okay.
I just picked a number. The guy runs the whole algorithm and the model and comes back and says, you have to make, in the 5 years, you have to save millions of dollars, right? If you want to, quote unquote, retire.
Yeah.
That's kind of how it started. But there's no real, I didn't have a dollar amount or anything. I just wanted to be independent where I could live a decent life. I didn't have a goal of X amount of money.
Got it.
It just so happened things all fell in place, and I said, okay, I'll do it. Mainly, it was predicated on having a family, being with kids, raising them, and that was also driven because I lost my father when I was 10.
Oh.
So when I said I have to have a family, I said I got to be very close to my kids and be with them at least for 10 years, And if I am only being there for 10 years, I better be there full time, 24/7, so that they would have that experience that I had. And luckily, I've lived beyond that, thank God. And I didn't have to go through the same challenge. My kids didn't have to go through the same challenge
that you did.
I had. Right? Yeah. So that's kind of how all this fell in place. So it was more driven by family and personal reasons than money.
But it still begs the question that although you did not have a dollar amount target for yourself, but at 35 and someone's telling you got to make these many millions if you were to retire by 40, how did you actually manage to make that huge sum of money within the short time frame?
Yeah, that was pure luck. I helped take a company public. I had my stock options were like, I think 25 cents. And within a year, the company stock was trading at $50. So I mean, so like I said, it was luck. That's why I could have stayed on longer and accumulated more wealth. But the timing all worked out, and that's when I kind of started doing this.
Got it. And when you initially quit your job, what led you to pioneer this idea of angel investing and not build a typical VC firm? Because being in Silicon Valley, Sandhill Road is full of VC firms. And when you're seeing VC firms on every corner, why did you decide to be different and pick up the angel route?
Well, I mean, the first thing I did was I bought Sandhill.com for $20. I didn't have to pay for expensive rent on Sandhill Road. So that was I looked at it differently. I wanted to simplify my life. I didn't want an assistant or a secretary. I didn't want a staff. I just wanted to be unencumbered. And so so angel investing was an approach where you took your own money, your own risk. You didn't have limited partners. You didn't have other people calling you with their money and saying, what are you doing with it? And what are the returns? I didn't have to answer to people. And so I just decided to be my own boss.
Got it. And was there some incident from the past that sort of drove you to be your own boss, or was it just a random call that you made?
It was more to simplify my life. I didn't want to go back to an office. So I have a home office.
Okay.
I didn't want an assistant, so I just wanted to simplify my life. And if I invested and I got tired of it, I could stop,
Got it.
I didn't have to have a fund which says you got to keep on investing, right? So it was just practicality, simplicity that led me to this path.
So even when you early on started angel investing, I think the biggest moat for you would have been the community, not necessarily the community, the network that you had built over the years, and the network that you could connect the entrepreneurs that you're investing into, right? So was network always a thing in the past? And I'm asking this because these are things in the 90s when I wasn't even born. So was network such a sought after thing back in the 90s, or was it something that you pioneered?
Yeah, I think there were networks, but they were primarily only physical networks, right? But they were networks. But I was a chief marketing officer of companies, so my job was to build these things, right? User groups, events, and such, which brought people together. So that's what I love to do, and that's why I did that commercially. And when I went on my own, I ended up doing them more with the philanthropic mode, right?
Got it. And when you created this corporate eco forum, what was the drive earlier?
No, this is a prior network. I still run this. The first network I created was called Enterprise.
Okay.
It was for 100 CEOs in the software industry.
Okay.
So it was really the network. I knew this community, right? I'd been part of the community. So my first network was to bring CEOs of the best and brightest software companies together to really have an insider event. It was an insider community. It wasn't like Larry Ellison coming in and saying, Oracle's great. It would be more like people getting together and talking about all the problems of the industry, talking about all the challenges, and how as a community we could help solve those and create new standards and new practices for the software industry. So it was really one which was, again, to be a force for good for the industry.
Got it. But in these early days, from what I gather, you were not still sort of focusing this community towards startups specifically. It was more about getting influential people together and asking them to, or having them to think about challenges at scale and how would you solve them at scale. So at what point did it morph into, let's say, something tangible, that you picked up a certain problem and solved it as a group, and maybe started looking at startups as a way to sort of, again, solve these challenges at scale, and you invest part of your money and effort into, grooming them into doing this? Yeah.
So two different things. I didn't mix my angel investing with this enterprise retreat.
Okay.
I did not mix them up because the ones who came to the retreat were all successful, larger companies, right?
Right.
The Oracles and the SAPs and those class of companies, whereas the startups would be, completely different segment. So I didn't mix them up. There were two different tracks, if you will, of what I was doing, and the things resulted in a lot of things. Like in the early days of the industry, stock options were issues. There were issues with that. Issues with hiring from other companies and non-competes, and all these were big deals in the early days. So as a group, to start talking about them, to make solidify what those issues were, come up with what some practical solutions were. That's kind of the insider part of it. The bigger motive for these people getting together was really to give back, right? So through Enterprise, we've given away millions of dollars to nonprofits. So when people come in to the retreat, they know coming in, and by the way, everybody pays to come to this, including keynotes.
Mm-hmm.
So, a guy like Mark Benioff, who runs Salesforce, paid a conference fee, a retreat fee, to actually come and speak, much like an attendee. So nobody comes for free. So right there, everybody leaves their ego at the door. Everybody leaves their company at the door. It's more to be, giving back, right? So when you come with that frame of mind, you can tackle big issues for the industry, as opposed to, I'm doing great, I'm growing at 200% a year, you're only growing at 50%. That kind of conversation doesn't happen. The conversations that happen are more like, do you have issues with gender diversity? How do we deal with minorities? How do we take a company public, or do we sell our company? I mean, these are the issues that get discussed in a closed door basis.
Got it. And what do you think was the reason they would not just come to this event, but actually pay a conference fee to attend this retreat?
First of all, I think I didn't have an agenda. So I wasn't trying to get my startup sold to these companies, which typically people would have thought, I have these big companies, I've invested in startups, why don't I help them with that? So I didn't have an agenda. My agenda was to bring them together and really orchestrate what happens, as opposed to be the person hogging the limelight and the stage, right? So I would let all the people there speak, interact, contribute, participate. So it was one of that, as opposed to, my event, I'm the boss, I'm running the show, right? So it's bringing people together as equals.
Got it. And what did this enterprise retreat lead into?
It's still going on. It's 25 years later. So I ran it for 10 years. And then took a pause when enterprise and B2B was not the hot commodity. It was all the B2C companies and the social networks and all those that were gaining the fame and fortune. So I stopped it after 10 years it was a great run. We had everybody who was anyone in the industry come and talk and participate, and a lot of good things happened. Then I stopped it for 10 years. And believe it or not, 5 years ago, Anil Bushri, who now runs Workday, met with me, and he said, you know what? Those were great times we had. Why don't we restart it to do this for the next generation of people who are doing software as a service and cloud computing and stuff? They don't have mentors. So why don't we restart it? And he said, I'll make it easy on you. I'll pay and come as the first keynote for this new generation of retreats. So he made it very easy for me in that sense to say, I'll be there. And he's the CEO of Workday. How can you say no? Right? So I restarted it 5 years ago, and it's going great again with a whole new generation of entrepreneurs.
Got it. And so when you've been interacting with these, let's say, new generation of entrepreneurs, do you see a significant shift in the kind of problems that companies faced in early 2000s versus in 2020s?
Very, very different. The amount of money these companies have raised there's no comparison, right? These guys are raising hundreds of millions of dollars for their companies at high valuations. And so the money part is quite different. The expectations are quite different. Everybody wants to be a unicorn. Everybody wants an exit. So it's a very different set of expectations today than the dot-com days, where the dot-com days was much more like, what would you call it? The wild, wild west. There were no rules, no regulations. Everybody was trying to do everything. With this new generation, there's a lot more structure, and the business models are much better defined now with the cloud and SaaS and these things. And customers can leave you whenever they want. In the old days, when you sold them a piece of software, they bought it.
Right.
They couldn't really leave you.
There wasn't another option.
Right. And so the rules have changed. Governance has changed. Regulations have changed. So this is a very different set. But the values haven't changed. When we started enterprise, the values were simple. Leave your ego at the door. Everybody's equal. There's no selling. So nobody can sell anything to anyone else. If you did, you were thrown out,
Okay.
right? Share, give back, let's help nonprofits, let's give back. So people would not only, we would give money to these nonprofits, people would add more money to the table. So if they saw us giving to a nonprofit $50,000, they might like the nonprofit, they give them more money. And not only money, but they would give them their time. Some of them ended up becoming board members of these nonprofits or advisors, mentors. So we created this whole ecosystem where they would participate more than writing a check.
Got it.
So those are the values that still keep it going.
So in a way, you're sort of taking CSR to the next stage and telling it's not just about giving money to public or social causes, but we would also help you execute it much better and at scale.
Absolutely.
And how do you, let's say, evaluate firms that you would want to contribute to? By firms, I also mean initiatives.
Yeah, so we pick nonprofits, and with my background in angel investing and working with startups, I've done about 150 angel investments to date. Wow. Over 25 years. So it's about 5-6 a year. It's not, it sounds like a big number, but it's 25 plus years, right? So I've done that. But because of that curiosity, I have an excitement for startups. We typically try to pick nonprofits that have a founder and that's small. And so again, with these investments we make, it could be hit or miss, just like a startup, right?
Right.
You could invest in a startup, it goes broke. We could invest in a nonprofit that doesn't scale, that doesn't become as big as the potential is, right? So we usually end up picking nonprofits with a founder who's still running the nonprofit, who has the energy and the commitment and the drive and the passion, and wants to really grow the business of giving back. So that's kind of how we pick these causes. And they have to be somewhat tangentially related to the tech community, where the tech CEOs will resonate with it.
Fair enough. Got it. But just curious, since you mentioned the angel investing part, when you're investing in, let's say, just 5 to 6 startups in a year, and being in Silicon Valley, you must have a ton of deal flow. So how do you really shortlisting 5 out of, let's say, 500 is quite a painful task. And has there any time been a moment where you sort of regretted not investing in a certain startup, and where you thought you made the wrong call, stuff like that?
Absolutely. We all have the FOMO, right? We missed out on something. But really what I do is, another way I give back is every week, literally, I talk to 2 entrepreneurs a week.
Oh, wow.
Okay. And either in the old days, it was breakfast, lunch, or dinner. These days, it's much more on Zoom and Google Meet and Teams and all that stuff.
Okay.
But I still meet 2 entrepreneurs. And over 25 years, I think I must have met, I don't know, a few thousand, 4,000 or 5,000 entrepreneurs like you, where I listen to the pitch, I give them feedback. Sometimes I invest. Sometimes I'll connect them to other people in my network, venture firms, all these things, if I think it's appropriate. So that's another service I provide, is just listening to entrepreneurs like yourself, giving them input, giving them feedback, once in a while, investing.
And typically at the angel stage, I'm sure that not a lot of pitches come to you with, a lot of traction or a product and revenue growth statistics and all of these. Maybe it's just 2 folks with a PowerPoint, like you mentioned earlier, just coming in there with an idea. So at that stage, do you just evaluate the opportunity, or is it just you evaluating the capability of these 2 folks who are presenting to you? Or what exactly are you evaluating?
Yeah, most of the deals I do are based on the chemistry I have with the founders, more than the total addressable market and the size and potential. My thing is, meet with the founder or founders, see what the chemistry is, see if they listen to you, see if they make a commitment, if they deliver on it. So these deals, I'm not like I'm in one meeting, right? I take my time, and if they go away, they go away. That's okay. It's not like I'm looking to make money. It's more the relationship over time,
Right.
right? And that's why a lot of times I have second-time founders, if I've invested with them before, I still have good relationships. They come back to me on their next deal,
Right.
And stuff like that. So it's really based on the relationship. And I'm not that smart. I mean, in the sense that I've invested and I've been lucky that a lot of these companies have gone public or gotten acquired, so I don't need to work. But a lot of it is luck. I mean, you can look at a company day one, and I've looked at companies where I go, this is a home run, and they've turned out to be disappointing, and others where I thought, yeah, it's a good deal, have turned out to be great deals. So it's very, very hard in those early days to judge any of these guys. So any investor who says, I knew this was going to be big, I wouldn't believe them.
But I see that you give a lot of, you place a lot of emphasis on luck multiple times. I know that you're being humble, but how exactly would you define luck? Is there, let's say, a more, a process that we are in control of for us to, let's say, attract luck? Or is it more of just accidents, a series of accidents?
So maybe the luck I'm defining is the type of people who come to me. Maybe they have certain qualities that attract them to come to me, or also qualities that make them successful. I mean, that could be it. It's their self-selecting. And so let's say you meet with a certain type of personality or characteristics of people, and they tend to be the ones that have more of a chance of success. Then if you invest in them, you have better chance of success, right?
So it's sort of largely something where it's not by design, but it's just how it works.
Yeah. And once in a while you might have intuition that says, oh, that's going to be good, Yeah. But I'm telling you, most companies that I know pivot in 6 months or 3 months or 9 months. So what you started off investing in is not what it ends up, So even the total addressable market and all that is nice.
Changes significantly. So it all boils down to your chemistry with the founders, and if you think they would be individuals who can pull it off.
And I've talked to many other investors like myself who have tried to do AI and pattern recognition and stuff to say, when I meet someone, and look at a deal, are there any patterns from the past? Most people have never been able to successfully model this. Maybe now with Chat GPT and all this new stuff, maybe they'll have a better shot at it. But nobody to date has had that kind of luck in looking at patterns.
I'm not sure if ChatGPT can model traits of founders, but ChatGPT can definitely come up with a great rejection message for founders.
Exactly.
Yeah.
True.
So, Amar, what about after enterprise? So, how did this idea of corporate eco come into picture? Corporate eco forum.
Yeah. So that happened, again, all the things I'm going to tell you all happened by accident. So I have to thank my karma for it, I guess.
Okay.
Because I didn't have a path that said I'm going to do X, Y, Z. I never had a path. So the way it happened was I also, when I was doing this nonprofit, I had started a for-profit business, which was to do commercial events, because there was so much need in the industry for not the CEO, but the CXO of these companies to get together. The VP of sales, the VP of marketing, the VP of engineering, the VP of HR. They didn't have places to go to. So I started a for-profit commercial event. And within a few years, it had grown really big and someone bought me out, So then I was again saying, okay, what do I do now, And at that time, I had my daughters. I have 2 daughters. They were, I think, 8 and 10. And I said, how do I be a good role model for them, right? And so someone was like, there's this whole new space called green tech and clean tech. Maybe you should do the same thing you've done for the regular software industry. You can maybe go replicate that. So I found a co-founder, and we were kind of looking at the space, and we kind of gravitated to the Fortune 500 because we felt that if we worked with the large companies, they could do a lot more than a startup could, because these companies have huge revenues, and if they decide to move a little bit quicker in a certain area, that would generate a lot more good than startups. You know, and so we went and talked to a bunch of people in the Fortune 500, and they said, we love this idea. And that's what led me to start the Corporate Eco Forum, CEF, as we call it now. I did it for my daughters, and it was to impress them. And now 15 years later, we have 76 member companies. These are the world's largest companies: Amazon, Apple, Disney, UPS, Ford, you name it. All of them are members. Their combined revenues total over $5 trillion. They represent 30 different industries. And what we do is we work with their chief sustainability officers of these companies to work on climate action, reducing greenhouse gases, working on ESG, buying more renewable energy, building sustainable supply chains. So what we do is we work on best practices, next practices, again, in a closed door setting. This is not open to the public. This is these leaders meeting in private, all working together, collaborating together to work on climate change action.
Got it. But when we look at the green energy sector itself as a sector, maybe between 2005 to 10, there was sort of a peak for this sector when there was a lot of demand, a lot of startups trying to build on the space. But eventually, I think we saw a decline in the hotness of this sector, and maybe now in 2022 and 23, it's maybe regaining momentum. So what do you think changed in between, or what is it about this sector now that is very different from back in 2008?
Yeah, a couple of things. One, I think 2008, we had the crisis, the oil prices went up, and then we had the subprime crisis, and everything cooled off for a couple of years, if you recall, at that time, right? And I have a friend, Bill Janeway, who used to be a private equity investor, who wrote a book and is a good friend of mine. And he said, MR, that when the dot-com bubble happened, I think something like $50 or $100 billion of private capital went chasing after the whole internet bubble, right? And the bubble burst, and we lost all the money, right? But what came out of it was all the internet companies, Google, Facebook, LinkedIn, Amazon, all these companies came out of that $100 billion investment, and we didn't bankrupt countries, we didn't bankrupt industries. So it was a very good way of creating an industry, if you look back at it, right? So he always was saying, I wish there would be a bubble in the clean tech, green tech space, and we'd throw 100 billion at this space. Most of the companies would crash and burn, but we'd have 5-10 solid companies like the Teslas and other companies come out of this, right? And so that is what I'm hoping will happen now. The market is red hot for climate tech companies. Yeah. They're getting funded left and right all across the world, right? So this is good because keep in mind, it's private money going after this. It's not government giving them money. It's not taxpayers. It's nobody, right? It's private capital going. So if they lose money, hey, private capital lost money.
Right.
But we will create 10, 20 new Tesla type companies in every sector, right? And if we did that, we'll solve climate change. So I'm very bullish for that reason, that we need to, just like we did throw money at the internet, we throw money at climate tech.
Got it. And so you also think there's going to be a bubble in the climate tech sector before it really shoots off?
I'm just speculating, right? I don't know. Sure. I mean, right now, a lot of money is going in. Now, is that defined as a bubble today? I don't know. I don't know. But a lot of money is going in, which is good. That's the part I want to point out. Not that it's a bubble or not a bubble. So everybody's pleased that climate tech is getting so much funding.
So, but I mean, if you sort of look at this entire practice that's happening, right? When you throw in a lot of private capital into building startups, and maybe some of these really turn out to change the world for the better, then it's maybe capital being put to use for a mass scale socialist experiment. So maybe it's sort of a culmination of the two approaches, and maybe money is just ridiculed otherwise.
Yeah. But at least, at least we're not getting government to make decisions. Right?
Right.
It's private capital saying, hey, I think carbon sequestration is good, or energy storage is a good segment, whatever be it, right? But the Eco Forum, really what we do is to really help these companies with issues that they can't talk in public, things that they want to work in private. And so we are a catalyst and a curator of those kinds of initiatives that we won't get credit for, and we don't want the credit. We want the companies who are involved in it to take the credit and build those businesses. So once again, we leave our name out of any of these things. It's not like Eco Forum did this, Eco Forum did that. It's more members do their own stuff. If it becomes public, it's their initiative, nothing to do with us.
Right. And
so these are the values we've set again for Eco Forum is, no selling, closed Chatham House rule, collaboration, giving, sharing, which results again in fantastic ideas being created.
Got it. And since you mentioned, private money going into such prospects is much better than government being a part of it, what do you think should government do better? Or what do you think can they do better, and how?
I think, obviously, there's a huge role, right? The three sectors that play into it. So there's government, which can influence by doing policy and regulations, right?
Right.
Then there's the private sector, primarily spearheaded by the Fortune 500 class company. And then there are consumers. You and I can protest. We can we can boycott some products. We can go, stop some things from happening as citizens, right? So each one of these parts of the ecosystem has a role to play. Government has to make it more conducive, invest in infrastructure that promotes more sustainable products, more sustainable forms of energy, transportation, so the government has to really provide a lot of infrastructure, but they shouldn't really be choosing between is company A better than company B or technology A better than technology B, right? They shouldn't be in that role, but they have a role to play, and consumers, you and I as private citizens and consumers have a role to play. So I think when all three kind of work in tandem or together in three groups, then I think it'll start really gaining more traction.
But when we speak of the role of consumers, what do you think should consumers, what is the role of consumers?
I think the consumer's role is to look at everything you're buying, and the first thing is to say, am I buying the most sustainable product or solution?
Mm-hmm.
How do I get information? Go use your own research skills, hopefully, to do that. Be a diligent consumer, and make your choice. That's one way. The second thing is you can fund nonprofits as well, to say, hey, go take action on my behalf. Third, they can become a movement and protest against certain companies or certain products, certain initiatives. So, the consumers have a huge role to play.
Got it. But while we say that consumers need to be thoughtful and aware of, what they buy, what kind of goods do they purchase, and if they are sustainable or not, even if we assume that they put in the effort to do that, a lot of sustainable products today, or the brands that come up with this mode of sustainability, typically charge a premium on their products. And by and large, we know consumers are, value customers. They're going to pay for something that does the job for them, and it's going to be much cheaper. So how do you sort of tackle this price strategy versus the mode of sustainability? And at some point, maybe let's say in 10 years from now, sustainability might be the norm. And at that point, it's not going to be a moat anymore for companies.
Right. So this is Vinod Khosla, my friend, talks about this rule called the Chindia rule, which is in China and India, consumers won't pay a premium for a sustainable product.
Yeah.
That's pretty apparent. In the US, people will pay a premium. Look at the premium being paid for Tesla, right? I mean, people are other products like that. So people in the US pay that premium. I think what has to happen with the value conscious customer is that enough demand happens at this premium end where the scaling happens where the prices can come down, you know?
Mm-hmm.
So, and the second thing is, you know, CK Prahlad was my mentor and advisor to Corporate Eco Forum. His whole thing on the bottom of the pyramid, right? Trying to figure out a way by using technology to make products more sustainable at a lower cost, you know? So bringing in a different kind of thinking, the bottom of the pyramid thinking, bringing in those kind of, and using technology as a means, as a catalyst to lower prices, right? So it's got to have, that's why he always used to say technology and sustainability go hand in hand.
Right. But if we look at, conventional products that weren't so sustainable conscious, for decades together, a supply chain has been established and they've been able to optimize on the operations, which is part of the reason why they're able to cut down costs of the end goods that is being sold to the customer. But when we talk about sustainable goods as such, do you think the supply chain, the operations have been mature enough? And if not, what do you think has to be done to sort of mature this or just optimize the way supply chain and operations work for sustainable goods?
Yeah, I think that's the work that is being done by our members at the Corporate Eco Forum. I mean, supply chain is one of the big priorities, right?
Mm-hmm.
And they're working diligently to look at various parts of the supply chain, how to fix some of these things. And so that is ongoing work. I mean, and keep in mind, these are large companies with complicated supply chains,
True.
right? And so they have to make so many decisions as to how many countries does a product travel before it reaches the consumer. You know, all these are very, very complicated issues. And especially in a competitive market, right? It's not like any company is a monopoly. And so they have other competitors, and how do they deal with that? So it's being worked on, but it's a work in progress. And I don't see, there's no magic formula to saying, we'll have something better in a year or 2 years. It's an ongoing challenge.
Got it. Maybe I'm digressing a bit, but earlier you mentioned about how, let's say, people in the US have the propensity and are willing to pay for something like Tesla because it's sustainable. But I'd want to ask if this is because it's sustainable, or is it because the car is just cool and it can drive by itself and a ton other cool factors that come with it?
Oh, absolutely. I mean, coolness is definitely going to be a great reason to sell any product, right? An iPhone, why do people buy an iPhone versus an Android? It's cool. So entrepreneurs and companies that bring the coolness factor into a sustainable product would be the magic formula to still get that price increase in that product and be able to still solve the problem of sustainability.
So while it's sort of tech meeting sustainability, the way for it to really cater to the masses might be to work on the design aspects of things.
Design, yeah, it has to be cool. Everybody now looks in so many products to see if they can offer that iPhone-like experience or Tesla-like experience. That's every marketing VP is studying that stuff, right?
Right. So you yourself, coming from a marketing background, how would you, let's say, market a sustainability brand today?
Yeah, like I said, it's got to have a certain appeal, both in terms of the product, the experience you get with the product, and also cool people who are already using the product. You got to get those brand influencers and people like that working hand in hand with you, so that it's not just the product is cool and the idea is cool, the experience, but hey, I've got cool people who are spokespeople for this. So it's actually not a science. It's actually an art. It's still an art.
Got it. And again, since you come from marketing background, and maybe influencer marketing is something that's picked up real momentum in the last, I would say, 3 to 4 years.
Yeah.
But we're also maybe seeing that there's a solid trade-off between, let's say, performance marketing versus influencer marketing that most marketing teams are struggling with today. Do you see a significant a paradigm shift in the way marketing is going to be done, let's say in 5 years from now? If so, is it still going to be conserved to social media platforms as we know it today, or do you see a significant change in the way things are?
I think with the investments going on in the metaverse and Web3 and stuff, marketing is definitely going to change.
Mm-hmm.
And it's going to be, and this whole thing between ad dollars and versus, other ways of doing marketing, all that is being figured out, right? And so I think, you'll see the future where advertising will take on a different kind of spend into different kinds of devices, products in the metaverse, Web3 kind of content. It's just starting. So it's too early to tell how it's going to go, but it's certainly going to change. Like how it went in the old days from print media to online search and Facebook and these kinds of marketing. It's now going to evolve from that to whatever the next generation is. And it's too early to tell what that is, but it's definitely changing.
Got it. And what do you think is significantly going to be different about Metaverse, or what do you think is a Metaverse all about?
I mean, it has a lot of promise. Now, can it deliver is the question. Okay. I think with Web3, the hope is my persona is validated, verified, but also stuff I do I get compensated for it.
Mm-hmm.
Right? So that is the promise, that I have my own persona. I do certain things. I need to get compensated for it. I need to be recognized for it, and so on and so forth. But how it's going to be implemented, how you get paid or recognized, not quite clear yet. And who's going to be the authority? Today the whole knock is there are a few social media companies that control everything. In the metaverse, everybody's supposed to control their own destiny. And does that really happen? Or are there still players that'll end up, being the companies that have a lot more authority? All this is up in the air.
Got it. This might be a very naive thing to ask, but early on in this conversation, you mentioned about how, when you originally set out on the idea of enterprise, people weren't happy to join unless you gave it the shape and form of a not-for-profit, where you give people a purpose and not just incentives for them to join you. And when we speak of that, and when you speak of Web3 or whatever it might have to offer in terms of everyone working here for certain incentives and everyone working to be compensated, how do you think it's theoretically possible to design a system like this where everything is driven by incentive?
I know that's why the whole blockchain technology is supposed to be helpful and things of that sort, right? But again,
from a technology standpoint, we might still be able to crack it, but from sort of at the end of the day, it's humans who are using it, and from a human system perspective, how do you ensure that everything is being driven by incentive? And if everything is being driven by incentive, how do you sort of provide for that incentive before the activity has even happened? I mean, even salaries are paid after the month's work is done. It's not paid beforehand.
Right. So, like I said, there's too many open questions that I don't have answers to, nor do most people. I think there's going to be a lot of experimentation happening in terms of the compensation, the monetization. And that's where, once again, the venture capital industry and the angels are going to help that, right? Because I'm going to fund a Web3 company that goes and tries something completely crazy. It may catch on or it may not. Right. So I think all those companies that are you're asking questions about are being funded now. Right. So in a year or two, you might see something cool, a new business model or a new way of compensation or gratification, whatever you want to call it, right? So it's not there today, and there's no core system of metaverse that's defined that everybody is beautifully working together in this manner. So we'll wait and see. Maybe in 3 years we can do another. 3 to 5 years we'll do another session, but it won't be like this.
For sure, yeah. So how do you see, let's say, once Metaverse is in functionality, how do you see Indiaspora working? And do you sort of see collaborations across the world being more feasible, more easier? What would it mean for Indiaspora?
Yeah, a lot. And Indiaspora is my third network, as you know, the one I started 10 years ago. And I think it can play a huge role because Indiaspora, so to give you some facts, there are 32 million people of Indian origin who live outside of India. It's the largest diaspora population in the world, greater than the Jewish population, greater than the Chinese population. It is the largest, okay? And Indiaspora's role is to be a force for good. And that means connecting these 32 million people to be a force for good. What connects us? The two things that connect us: one, we are Indian origin, and two, we all have today a phone, right?
Right.
So, or whatever the next device that'll come up, right? So we have two things going for us: the phone or the mobile device, and we have our DNA. So Indiaspora's role is to connect them. How are we going to connect them? Right? I think that is where we can use the metaverse and Web3 to really meaningfully connect these people, whether they want news about certain things, they want to shop for certain things, they want to pay for certain things, they want politically to be active about a certain issue. Today, there's nothing that connects these 32 million people at all. There's nothing, right? And so that's where we are going to start experimenting at Indiaspora, hopefully this year, in terms of how do we start connecting with these people, whether they're a worker in the Gulf working on constructing a building, to someone in Fiji who was gone there 100 years ago, to someone in the United States or Australia who's a new immigrant to the country. How do we connect all these people and turn them to be philanthropists, turn them to be givers and not takers? That is our big audacious goal for the future.
Got it. And Indiaspora, and I would say even TIE, the Indus entrepreneurs, are probably two of the largest of such organizations that cater to millions of people, including entrepreneurs. Yeah. So the question I would ask is, when you're building a forum like this, how do you sort of build a hierarchy within? How do you, since most of it is volunteer basis, right? How do you still motivate people to take on roles and invest significant amount of time and effort into performing those roles well and doing it well, and still stick to the mission and take things forward?
Yeah, so we took a different model, Krishna. So Indiaspora is not a volunteer model at all. Okay. It is a staff-led model. So we have 15 people who work full-time at Indiaspora 24/7. Mm-hmm. So we are funded by members of Indiaspora who generously donate money to a nonprofit, right? So our model is quite different than TIE. TIE is volunteer-driven. We are staff-driven, team-driven, of professional people who are totally, enthusiastic and passionate about their jobs to make this a force for good, right? So we have a team of 15, and they work with our members. They work with the greater community to do events, to do projects, to do things, and they kind of manage and supervise all these things. So we are able to do it in a very different way, but that's kind of how we have set it up. And we looked at both models, but we found in talking to a lot of people, putting a lot of money into something you believe in is the way to go. Getting a professional team was the way to go, and that's how we have set it up.
Got it. I think you recently even visited India, right? I think in late 2022. So what is one thing that you find in early stage startups, specifically in India, and what do you think is promising about them?
I think I look at there are two or three segments that you can categorize it into two or three segments. One obviously is built for India in India, right? So startups that are only working in India and doing things, for the Indian market. And then of course you have this whole enterprise SaaS space where a lot of these companies not only sell in India, but they're selling to the West, they're selling globally, right? And in many cases, the CEO or the founder moves to the US to be closer to the customers. That's another trend that I see happening more and more in the past 3 years. Once they get funded with the Series A or B, they move because many of their big customers are in the US or in Europe. So a lot of that has happened as well. But I think the interesting play in India that is just starting is using the India stack kind of play, right? So you have UPI and Aadhaar and Jandan and all these different things that have been created for India by as open source products for the most part. Can you leverage that, and can you take that and use that in other similar countries throughout the world, in Southeast Asia or Africa or Latin America, right? That could be a pretty interesting set of companies that could come out. I'm looking at the early stages of some of those companies. I think Indiaspora is also advocating quite a bit that there's an open source, what we're calling cloud in a box, right?
Yeah.
So if you could take all the things that are open source that help a country, can you give that to multiple countries? There's so many countries that could use the India stack in their own form, knowing that it's open source, knowing that the data is theirs, it can be kept private in a cloud in their own country. So that would be helpful as well. Because if you can export that, then a whole lot of product companies can go behind it, right? E-commerce companies and banks and all kinds of lending institutions, everything could kind of go behind that globally. But if know through Aadhaar, that person is that person, it's validated.
Right.
Through that they have a bank account or a phone or a payment gateway is being used, all that stuff is set up. Your customer could be in Peru or in Brazil. It doesn't have to be in Bangalore or some other city, right?
Right.
So that could be an interesting new model that happens. And as India gets, the big thing I found in India last year was the sense of pride in the people was palpable. At the 75th anniversary, India now being the president of G20, but most importantly, the economy hitting 3 trillion and growing. Right? At the end of the day, it's going to be money that drives influence and global recognition, and that's happening as well. So the combination of all these things bodes well. So I think, I'm hoping that in the next 5-10 years, we'll see startups in India get to the world in a very different way than they are today.
Got it. And one thing I've noticed is a lot of startups that have really cracked the code or stuck around for over a decade or so are mostly consumer-facing startups. And maybe for a long while, there's been a narrative that there's not a lot of market for SaaS in India. If you were to build SaaS, you had to sell it in the West. Do you see that changing? Do you think, or what do you think will create a market for SaaS in India?
I think the economy growing is one. Getting global competition. So companies in India also have to start using products. And it is starting, by the way. I'm hearing of companies in India signing $1 million deal with an Indian, customer. So these are starting to happen. I think the large Indian companies see merit in buying good software and SaaS products. So it's starting to happen in India as well. But I think global competition is probably the one that's going to get everybody to use this. And the nice thing with SaaS products is you can also have low-end products and such. So I don't see why it doesn't become more prevalent. Now, the main thing will be the cost issue, right? Is the one that companies have to solve. But there's no reason for Indian companies not to use SaaS.
Right. And that's maybe just enterprise SaaS. But when we speak of, let's say, consumer SaaS, or B2B SaaS, for instance, let's say paying $10 a month in the US is very different from paying 800 rupees a month in India. The parity really shows up. So how would it be possible to, let's say, scale down the cost for SaaS in India? Because SaaS is not something where, just with scale, you're able to optimize for the operations and the cost that you are incurring as the company, and then therefore you reduce the cost for the customer. How do you think this should pan out?
I mean, I think even in the old days, companies always had a pricing for the US, and then they had pricing in China and pricing in India, and those prices were lower. So I think it has to initially take shape in that way, right? That you buy product X and you're a user in the US, you pay a certain price. And through your IP address, they know you're in India, it charges a different price. I mean, I think in the short term, that's the only solution I can see,
Got it.
Is a price differential.
Good. And what's one advice you would give to entrepreneurs, MR, who are just starting out?
Man, I mean, I think my experience is I tried 3 times before I became successful.
Oh, wow.
So my first company, my first job in Silicon Valley was in 1982. It was my first startup. And 3 years, it was great. It would double. And then chapter 11, right?
Okay.
Broke. Then I went later on to another company, same kind of thing, boom. And the third time, like I said, again, it's luck. Some people hit it the first time. Some people wait for the 5th time. I have no idea, but not to give up, because, you may not succeed and the odds are against you being successful with your first company. It's so tough, right? For every 1,000 companies that start, maybe 10 get successful, So I would say persevere, don't give up. And that's what I did. So many people in Silicon Valley are still doing that in the pursuit of, getting a successful exit or a successful company. But again, it's a long path, right? Most companies are not overnight successes. Everyone thinks all these companies are over, but they take 7 to 10 years to really become successful in any form or fashion, right? So if you're starting as an entrepreneur now, it could take you 7 to 10 years to see if you're successful. So don't get in unless you have a stomach for the long road ahead and ups and downs. And you may have to try again. That's the other thing to keep in mind.
Yeah. And if you were, let's say, in early 20s today, what would you be doing today? Fresh out of college.
If I was in my early 20s, I would be, if I could afford it, taking a gap year, traveling the world, doing something impactful with a nonprofit, because your generation, Krishna, is going to live for 100 years. That's the longevity of this generation. So why do you want to get started at 22 and start a company and do all the stuff? Start at 25. You'll still be able to spend your golden years retired or whatever you want to do later. You'll have lots and lots of time to do it, right? People are living much longer now than my parents' generation or my generation. So don't hurry up to do everything in life by age 30. Then you'll have 70 years to do nothing. So if I was in my 20s, I'd be with a backpack, traveling somewhere, or helping a nonprofit, do something, follow your passion and not making money. And then you get into, okay, I do need to make some money to survive and follow that later on.
Interesting. But there's also this sort of challenge that people in early 20s face, that since there's abundant amount of talent present, and there's this sort of competition, if you just say I took a gap year and I was just chilling, then the companies are probably being questionable about your credibility.
I don't think so. At least in the US, it's a trend now.
Oh, of course.
Any kid I know in the US is taking a gap year before they join college, or during college they take it, or after college. It's become pretty common in the US. So nobody here has that kind of issue as far if you're good,
Yeah.
You have to be confident in yourself, but if you are, people here are doing it all the time, including my kids.
Got it. And Emma, lastly, what do you think should India do in terms of startups to hit the 5 trillion economy mark?
Yeah, I think the euphoria of unicorns, I think, is has to subside.
Okay.
Being a unicorn, I think the 100 unicorns in India, a good bunch of them are going to go down in value.
Okay.
you know, so I think you got to build a good company rather than look for valuations. So I think you got to find a good product, a good business model, and stay the course for 7 to 10 years, as opposed to in 2 years I got to hit unicorn status. I think that thing is one of the past. Hopefully that euphoria in India has died down, because I don't think they're going to be 100 more unicorns this year, right?
Yeah.
And so hopefully that'll die. And some of the unicorns will have down rounds and they'll be out of the list this next coming couple of years, right?
Yeah.
So I think it's really to build that $5 trillion economy. It's to ease the regulations, is to make companies, easier to start, easier to build, easier to export. All that kind of stuff is what I think. The talent is there. The talent is there. The infrastructure is there. The role models are there. India is primed for a golden decade. That's what I tell people. In the past, it was like India is going to be good, and it was always disappointing. And now I think people sense that Indian companies are being built to last. They're going to grow. They're going to add value. So I think the next decade is going to be fantastic for India. And I'm happy, when I was standing at the 75th Independence Day, I was privileged to be invited by the Prime Minister to be at the Red Fort and to sing the national anthem as a former Indian citizen and as an American citizen, and stand and witness what has happened to India in 75 years is mind-blowing, right? And I can't wait to see what the next 25 years, what's going to happen. It's going to be good. This is India's decade for sure.
Got it. And if this is India's decade, what is stopping you from moving back to India?
Well, I mean, keep in mind, I'm an older guy. I've spent more of my life outside of India than India, and my kids are US citizens. They're born here, right? My family lives here. So, but I do come. I travel to India at least 4 times a year. So I think last year I probably spent close to a couple of months in India.
Yeah.
So I do come back and forth. I enjoy that, and I'll continue to do that. So, but I love where I live in San Francisco, and I'm not going to be moving.
Sure. Thanks a lot for doing this, Amar. I think this has been quite insightful for me, and maybe different because I sort of understood how do you look at building communities and building movements, and look at things beyond incentives, and how do you sort of maybe convey your mission to a larger set of audience and get them on board with you. I think this has been very insightful. Thanks for doing this.